Gold and silver have caught a bounce today on September 6th, 2013. Gold being up just over 1% at 1.54%, and silver just under 3% at 2.72%. So the levels to watch here on silver, the next upside target is going to be the $26 level. That is where the major resistance is. So if this rally continues, look at the $26 level as being a line of major resistance. Now in gold, gold is currently trying to fight through this $1,400 level. If gold can find support above 1400, the prices will then move up to the next resistance line around 1475. So those are the areas to watch for both gold and silver. Now the reason silver and gold are up so much today, or should I say one of the reasons gold and silver are up, is mainly the US payroll data that just got released. So gold prices jumped on Friday after US non-farm payrolls data missed expectations, curbing expectations that the Federal Reserve will start paring back its $85 billion monthly bond buying program. So the hot debate for the past few months has basically been, will the Fed taper or will they not taper? And everybody has been keeping a very, very close eye on the economic data that has been coming out to sort of give us an indication of which way the price will be trading in the future. Now, that's just looking at the gold and silver side of the trade. This tapering is going to affect the entire market, but this YouTube channel is mainly based on gold and silver, so I will just basically be discussing the effects on the gold and silver prices. So if we scroll all the way down to some earlier articles here, on August 29th, we had a report here that says data supports QE tapering, US GDP expands, jobless claims shrink, gold and silver prices fall. So this data was actually supporting QE tapering, mainly because US GDP was growing, jobless claims shrank. That basically means the economy was improving. But if we actually go back before that, there was a report that here, U.S. housing weakens, gold and silver gain. Will the Fed taper in September? So the housing market looked like it was weakening. However, the U.S. GDP numbers and the jobless claims were getting better. So these were two conflicting data points showing that one said that we were going to taper, one said that we weren't going to taper, or at least the likelihood of such an event. So now the recent data that has just come out is actually supporting the fact that we can't taper so soon because the US payroll data did not meet expectations. It wasn't on track for the economic growth that the Federal Reserve wanted to see. And I don't know, this is just one indication of what they could possibly do. It's not telling us exactly what they're going to do, but it's kind of just like a hint. Now, we all know the Federal Reserve, the main thing that they hinted at, what they were looking at, is unemployment. So the unemployment numbers are going to be the biggest indication of whether or not we could be tapering this month. So we have some more information here on dailysilverupdate.com. Gold, silver, bonds, and US dollar report, technical and fundamental analysis. So this was released yesterday. Gold sank almost 2% to two-week lows on Thursday as upbeat U.S. economic data heightened expectations the U.S. Federal Reserve may soon rein in its massive stimulus program that has bolstered bullion prices. So this report has a lot of good information here. I started it off with some 2014 predictions, one of my videos, and the rest of the information here is all current information. So this is basically about what happened yesterday. We also have some technical analysis by Endless Mountain, sorry about that. And basically Endless Mountain here talks about the $26 resistance level for silver, and he also goes into the US dollar charts. We also have a jump in bond yields. So as many of you know, the 10-year, I believe it's the 10-year note, the interest rate has been rising. Or sorry, the yield on the US 10-year Treasury note rose to the highest level since July 2012. So bond yields are rising. Now, this trader here is saying $1,000 gold is a definite possibility in the near future. So that's all I have for today, guys. There's a lot more information here on dailysilverupdate.com, including Basel III could boost physical gold demand. It's basically talking about how after the financial crisis, was analyzing the financial crisis and which assets had and did not have liquidity. It found gold, which was largely thought to be illiquid, proved to be actually very liquid. So this is a really interesting article. I'll just let you guys read that yourself. And also, world leaders pressure Obama over Syria at G20 summit. So as we all know, the G20 summit is currently in meetings. The group of 20 is meeting to discuss economic issues, and it looks like Obama's getting pressured over the Syria conflict. So there's a lot more here at dailysilverupdate.com. You can find the link down in the description box below. Don't forget to leave a comment, and please like this video.